afternoon, Scott Rutledge, T3 Live. Welcome to today's recap. So it is Friday. It's been a long week. There's been a lot of banter back and forth. Can the market continue? Can we sustain this move? Is it warranted? Does the economy, give us enough power, or is it strong enough to relate to a stock market that could continue higher? And I've been doing this for a long time. I think I started, when did I start? I started in maybe 1998. And there's always time periods when the market is just in control of what's going on. And you can't overthink it. And everyone that's overthinking it is kind of shooting themselves in the foot. I know today was a difficult day. We had a jobs number, and we weren't sure whether or not, it was a time when we could be discounted more to the downside after a few soft days in the market, or if we would continue to new highs. If we were going to get the Dow 14,000 or sustain a little bit above S&P 1500. But all in all, news came out at 8:30. We talked about how it was somewhat Goldilocks fashion, where it wasn't so strong that the Fed would have to, stop what they're doing. Stop what you're doing. That song anyway. Back in the day, who is that? Run DMC. But sorry, it's been a really long week. So the Fed doesn't have to, veer off course, and it wasn't a disaster where, the bears were able to take control. So you had a little bit of time to think about what you had to do. We knew that our pivot point was 150.95. A micro point, just in case we were going to continue lower, was really 150.40 if we were going to have that 60-minute head and shoulders pattern give us a move down to the 21-day. But it didn't happen. We have to read the tape. What happened was you had a gap up. They tried to sell it off, it didn't, and you had a gap and go, and there was a lot of nice movement amongst a lot of different sectors. Some sectors that have been basing and some stocks that have been showing leadership. And everyone's trying to make excuses. I know frustration is running high, and it always happens when things are moving in a fashion where everyone thinks that everyone's making a boatload of money. And you're probably going to go home this weekend, and your wife, your mom, your dad, your kid is going to be like, oh my goodness, Dow closed 14,000, are we rich? And as a trader, it's not the case, because sometimes you sell too early, sometimes you start shorting too early, and you might not even be in the right stocks. But brush it off. It's only January. We have 11 months left, and I do think this action is conducive for higher prices, and there's enough rotation where we're getting really nice setups to stay with. And hopefully you've been holding some kind of portfolio approach, because that's what we've been advocating since pretty much the Thanksgiving week after we had the November 16th low. So granted, we haven't been in the best stocks at all times, but 7, 8, 9, 10, 15 longs with one short, you have to be massaging and making some money somewhere within there. So with that said, I'm just going to bust through some charts right now, because I got to catch a ferry and you got to get into your weekend. And if you look here, here's the spiders. Here's the S&P. Okay, here's your gap up. Remember that? This was the gap up after New Year's. Okay, sideways consolidation, nice digestion, let the 8-day catch up, little stair step higher, let the 8-day catch up. Then here was the pivot high, 1474 in the SPX, 148.11, boom, move to the upside, a little bit of sideways consolidation. Sometimes you have consolidation and a retracement to the downside, which could have hit the 21-day. It didn't happen. Sometimes you have sideways consolidation, and the headlines have been, market's down 3 to 4 days. Are we heading for a fall? You know what? Boom. We closed at highs, 151.24 above the recent pivot of 150.94. With that said, there's been a lot of stocks that have been acting better than others. One of the best high beta names has been Google. And I know I've been trading it back and forth throughout the course of this year. Last year was my high beta tech stock of the year. And it did make all-time highs last year, and it looks like it's going to make all-time highs this year. So hope sometimes strength begets more strength. And if you look here on Google, it was on the price point sheet, I think around 760. And reason being is because you had a nice gap up on earnings. Okay, it was a little choppy. Remember last time we had it as a swing was back here in November when it crossed this, 675. And if you held it as a swing trade, congratulations. If not, if you traded it, okay. Last nice trade was right here. Bull flag. Here is, your pole. We talk about patterns. They make sense. Here's your gap up with a pole, having some pent-up momentum because it never even came to fill the gap, and then it crossed above 760. And I know I tried it on this day. Didn't really work. Yesterday wasn't easy, and then today, pow. Unfortunately, I didn't take advantage of it, as some guys on the desk did. Congratulations. And here we are closing at 775.60 above the prior high of 774. Very, very healthy. Reason last year I had this as my high beta stock of the year is because you look at the monthly chart, you look at the consolidation it had in this time pattern. Okay, whereas for the peak that took place in 2007 to where we are now, Google was all about search then. It's a hell of a lot more than that now. And there you go, at highs. So I think there's no reason why this can't get to 800. Obviously, there's not a lot left in there for those non-vol, but if you're a Google investor, congratulations. If you were a Google trader, congratulations. If you played it just today for cash flow above this level as it held it, and this time had momentum, and when momentum stayed there, you know what? Nice job. Congratulations. Great play. As far as some other high beta names, that's the problem here for traders. It's just that there's not a lot of high beta tech that's participating in this move. And to me, it's a little upsetting also. I love when high beta tech's going. I love when you could go from stock to stock and things are going. I love when Apple's in play, and Apple has not been. Let's just go to Apple right now. Here you are with Apple. This has been the move from the highs here at 703, broke this, this support, broke this trend line. You had one little day here where it was a nice red dog reversal. I think we made some decent money when it came back up to the trend line, came back down, and at this point, it's really not showing you much. I'm in a little bit. I don't know even why. It's acting so poorly. I got stopped out early on. Here's your 440. Okay, this was 440. This was that gap. It came in there briefly. DeMark, I don't want to say his name, but he came out again. Remember last time he came out when we closed in the dead lows, and he said that Apple's going back to 600, and I think you had a small move here. Okay, and then it wound up coming in, and then earnings, pow. And now he came out today saying we're going to have an island bottom, or it's going to gap up Monday. We'll see if we get that gap and go whatever. Respect him as a technician, but as of now, this really isn't showing us much. Same way I think there was a call out there that spiders or the SPX would hit 1,500 and then fall 5%. So anyone who saw us hit 1,500 on this day, which we did, 1,509, shorting, saying, oh, well, I was told we're going to fall 5% from kissing the 1,500 level. Let me get short. Let me blindly just believe in someone's methodology, because 5% lower is a lot further down. They're in a position where they don't know what to do now. So the reason why I bring this up also is because there's no holy grail on formula, or no holy grail on a process, or there's no holy grail on one charting system. We believe in, if you read The Modern Trader, and this isn't a cheap promotion of the book, it's really, the book is about a methodology and a formula, about an approach, and an approach that takes money management, takes discipline, it takes working on your skill set to know what you're good at, know what you're bad at, know what time frame you're trading, know all these things so you can put together your approach to take advantage or just maneuver the markets. However you're looking at it, whether you can handle 7 to 15 stocks, whether you have to be more on 3 to 5 stocks, whether you need to take less risk overnight and just really day trade, whatever it is that you do well, you need to know what it is and you need to expand upon it and keep learning. So when you hear somebody come out in the media that everyone respects and says, this is the way it is, don't take it for verbatim, so to speak, if that's the word. Take it with a grain of salt and say, okay, this guy has been consistent. He's made some decent money. Had a really nice call, in December, which we agreed with when the Shanghai Composite or was in the doghouse, and said it's a better long than short. And I was like, yeah, it makes sense. China should come back. It's been out of play for 2 years. Nice consolidation. Let's go. So they're just things that you should look into and then see if it correlates with your process before you start getting all excited about it. And I tried to just tone everyone down when they're like, oh, we're told that we're going to have a gap and go on Monday, and maybe we do. We'll see. But if that happens, there's also a lot of opportunity to get involved then. So moving on from that, finally today, the banks have been in play. Goldman and Morgan have been making new highs, but finally I think some of us have been concentrating on Citi and Bank of America. They woke up a little bit. Goldman Sachs, best in breed. Look at this chart. This was 121, nice core trade. Here's your gap up, boom, following the 8 days all the way to highs. Morgan, even on the pull-in, I remember on this day, I was like, wow, Morgan Stanley's really strong. And that was the day we were closing right around the 8th day. I'm like, either something's cooking there, someone's going to upgrade it, or it's just that strong. And then you had an inside day and pow. As far as Citigroup, finally, getting back on its horse. It had a really nice move, so it needed more time to consolidate. Broke through its downtrend. I didn't go with Citigroup, but this looks as if it could continue here. Bank of America is what I focused on today. Not best in breed as of right now, but from 9.95 to over 12, or even here from when we started focusing on this at 8, takes time to absorb such a move. And then finally today, it closed well on its game, almost right around this pivot right here. And I think it's in motion now to get back above 12 and get to some of our weekly objectives, which happen to be 14 to 16. Okay, nice little bull flag type pattern ready to go again. So not so bad. People are looking at Netflix, a little choppy up here, but rightly so. Look at the move it had after earnings. Give it some more time, and I do think gun to head this goes higher versus lower. Amazon, really not much going on. It's more, I would say, negative than positive after the earnings. It couldn't get through 284, coming back down towards support here. I haven't touched it since, and I think it's been very, very choppy, hard to deal with. Today, Facebook, a little disappointing. I would have thought that it would have been a little bit more of an inside day versus closing near the lows of the day on such a strong day. I guess this is, your 2 levels to watch next week. If it were to start breaking below this support here of 29.27, I would definitely get a little concerned. And obviously, if it broke the earnings low of 28.74, then there's something wrong. So let's just hope that it stays in the game and stays in this somewhat channel type formation. This stock hurt me today. I came in, decent amount of longs. And if you look here at the chart, there were some levels to buy it during the course of the day. And one of them, just so you see here why I was looking at it, was right around here. This is where, it broke out from yesterday. So I was like, okay, maybe it holds here, holds 30. So we did get involved. It looked like it was going to break to the upside, and then it could never get really above this 30, 40 and change, and then continue to the lows of the day, which is not the best thing to see, but I'm going to give it a little bit more time because Facebook tends to be tricky. So I would say right here, this is your zone that it needs to hold, 29.27 to this particular low here. I did take a little more on the close. Hopefully it stays in the game, go sideways here. Look how messy this was before it continued to the upside after this, last run. So that's a story there. LinkedIn, I'm in a call spread, hanging around here, near the highs. This too, it seems as if it could go with a really nice report. It's got a very, small float. Some shares are short. It's been, public for only almost 2 years, not even. So it's hanging out around here. It's been choppy lately. It was a nice trade when we did it for the common right here, when it went above this 116, and then it was a nice add above 120. And I do believe I stole my common into this move, and then I did the other end of my call spread, and I still have another end to do on the call spread. So if I'm going to make money on this call spread, which some of you are in with us, unfortunately we're going to need a really nice report, and the thesis is going to have to come true where it goes to 135, 140 with a nice report. If it doesn't, I'm going to lose my premium paid, and it'll just be the cost of doing business, but at least it's calculated. We shall see. As far as some other groups, if you look at some of the stock in some of the groups like the Russell here, I know that the Russell and the transports both came in, briefly breached the 8-day. For an active trader, that was something to take caution with. For a swing trader, never got to the 21-day, never got down to, not even, let's put the 50-day in, because the 50-day is really something for swing traders to look, closely out, because 8 and 21 days for the professional trader that manages the positions every day, can buy and sell quickly. So for this little day in the Russell, no reason to run for the hills if you're someone that doesn't do that many trades. And here we are back at highs. Transports, I don't know if it really hit this high here, but this too took this 1 day in stride after what was a really nice move, which we isolated this descending channel here in the transports that wound up giving us a really nice move to the upside. TBT, been holding it for a while. A lot of people thought it was game over with that weak jobs report. It opened down and then engulfed it really well. This thing has been a methodical move to the upside. This is when I got back involved in this gap up, and you've seen it green on my virtual trading floor, meaning I'm still long, and look at this powerful move to the upside, telling me it's going to go higher. DBC, something that I've had on for 2.5, maybe 3 weeks. I did trim some today. This is when it got interesting for me, when it broke above this channel here. Then it even got more interesting when it broke above this flag, and here's a little bit of a topping tail. So if you sold a little bit into this after a big move, why not? Something off the beaten path that people like Red Dog, DBC, I've never seen you in a commodity indices, so I'm trying to expand my time horizon because some of these tech stocks just have been very difficult, so that's fine. Walmart, I'm still holding. You know, it's not a barn burner type trade, but closed near the highs and it's rounding up. It actually is almost ready to fill this gap here. So, you know, it's just something that I have on. I don't love it, but it's fine. Last year, this was my retail stock of the year because, again, look at the channel that we had on the weekly. Not because I love Walmart, because I think that it's a great place to shop. It's because it had a huge, huge channel, was ready to break above it. So this, to me, in a cost-conscious environment, made sense. And there was your move. It went through my target. So down here, almost retesting, and I figured it's a nice place to put something back on. And it hasn't really proven to be a barn burner, but it's trending higher. So Walmart, not so bad. Let's see, what else do I have on? I have DELL. Looked better, and then all of a sudden came off a little bit because there was talk more of a deal being done at 13 to 14 versus 14 to 15. I wouldn't say I have a lot on, but I have a little bit just in case the deal is closer to 15. We'll see. And all in all, technically from the lows here, it's acted very well. Right here, it was a buy well before they talked about going private. And I do believe Sperling was all over this before that news hit that it was willing to go private. So whatever. IBM. Very nice technical pattern here. I don't know who is in here drawing this, but it's giving you no reason for that yet, okay? Because what do you have here from our swing trading course? We talk about a gap up that has held. Here's your gap up, huge pent up momentum in here, shorts trapped, longs looking to get in, and there you go. So at this particular point, technically looks really solid still. I haven't been a believer in IBM. It's something I'm not focusing on. Last year, we had some nice trades there. This year, haven't really looked at it. But all in all, holding the gap up. If you're long versus 8-day or versus the gap, congrats. And if it starts getting above, what is this, 206.22, could see more upside. So, you know, stay with it if you're there. In the doghouse is VMW. So many people just keep drawing on my charts. I'm going to have to start looking at this earlier. But here you go. At this point, you still have this lower range that that's intact. Today was actually somewhat of a green day, right? So here's your big hole in the chart after the earnings that were somewhat surprising. Here is your support, and here is your resistance. So if this were to start taking out $80 early next week, you know, maybe there's a nice little trade to take us back to this pivot right here. So we'll see what happens. You know, if it opens down and has another inside day, you know, stay away from it. So here's your level. You know, with volume attached, we could see a nice trade. This could be, you know, just on your forefront next week to see if it winds up triggering, because this is a stock that people like to be involved in, and it's in the penalty box right now. It's trying to hover above major support, going sideways for a long time. So we'll see what the story is there. Right now, you have your haves and have-nots. This is a have-not, but there could be some type of Q trade there. As far as some people were asking me about Boeing. After all said and done, you know, with the engine trouble, the fires, or this or that, you know, it's just still taking time. Still in this channel. You know, not much going on, obviously, not showing relative strength as the market's taken off, and this one's just in this zone. So right now, it's still, you know, I would say at least it's getting out of the news. So at some point, if it starts breaking above, just say 75.5, maybe it tries again. If you're holding it as a swing trade, just stay in tier 1. Today, some people had some success with LVS because they came out with some what was perceived as negative news, right? After earnings, nice day on earnings, came in, and then all of a sudden found buyers, didn't care what they said today and closing the highs, so that looks good. WYNN had somewhat soft earnings yesterday. And look at, you know, all said and done, it didn't go down. So maybe this has, you know, something to look at for next week. I know MGM we were stopped out of, But this, as well, if you look at it in perspective, still holding the 21-day, holding this nice channel after a really nice move from the last calculated buy price around 11 bucks. So this one, could be on your radar as just a position, not as really as a trade, because it doesn't trade that much. And then you have gold. Gold, everyone's real upset with gold. It's not making a lot of sense. Gap ups aren't holding. Gap downs are getting bought. And, all in all, this is major support down to 158.5. Here's your downtrend that we haven't been able to take out since the highs of September. For this to ever get interesting, it's got to take out 164.40. And right now it's just noisy, hard to deal with. And there are easier, more cleaner things out there. So I would just stay away from it. So with that said, a lot went on. January, it's going to go down in the books as a historic month. You'll read the headlines, you'll read Dow 14,000, you'll read S&P 15, 13, wherever we closed, and you're going to think to yourself, how did I do? Did I make money? Did I fight the trend? Did I only look to get short? Did I listen to people on my Twitter sphere? Did I, get thrown off my game by guys on my desk? Did I read too much into the headlines that said, the rally's not warranted? There are a lot of things that traders did and made a lot of mistakes along the way. So what you have to do is you have to think about what you did wrong. Maybe write a list. Say, I did this, and this wrong, and look at it and read it so maybe you don't do it again that way. And then if you look at a few things, say, this is what I did right. I stayed with this trade a little bit longer. I held size, passed resistance 1. I went to resistance 2. I didn't overly do my hedge after a pull-in. I covered it and then I waited for an extension. There are so many things that could have been done right or wrong. Or did I just focus on Apple? And meanwhile, Apple was kind of gross this month, where if all you did is focus on Apple and you missed out on all the other moves because Apple was something this year or last year at this time was so phenomenal, then you didn't follow Who Moved My Cheese or whatever that book was. There are a lot of things you could change, being that we're still in the first, or we just finished the first month of the year. There's 11 months left. And typically traders make more money when we have maybe in February a digestion month where we're up or down 1%. Because when we're up or down 1%, you could find the specific plays that are showing its face versus everything going or not going. So it could be a better month next month because the performance anxiety is off and you could see where the patterns are triggering and resolving and you could do better. But if you're frustrated and you overtrade and you revenge trade, you're going to get yourself in a hole that's unnecessary. So brush it off. Enjoy the Super Bowl. Eat a lot of wings. Have some spicy food. Drink some beers. Root on your team. Play with your family. And don't think about what took place this month because we have a long year ahead of us. If you have a macro plan, congratulations. I've been pounding the table for a few years, back from even just last February with Kramer, with S&P 1700 by 2015. I know that's not the time frame I professionally trade on, but it's a time frame to know if you wanted to have, a 401k or whatever it is you do, you need to have different plans. Long-term equity plan for your family, intermediate trend plan that you could trade for cash flow for a living to add also income to your existing profession. And then if you're a professional trader, if we're in an uptrend with risk on, you're trying to hold a portfolio approach. If we're in a downtrend or a shaky time, risk off and you're more tactical. And that'll be what happens time and time again. So 3 different time frames, a lot to process, a lot to work on, a lot to evolve with. And unless you start, you're never going to get anywhere. So just start. And if you're doing well, congratulations. Have some extra fun this weekend. You deserve it because it wasn't the easiest environment and the most conducive for traders in the month of January. More for investors that were just holding or swing traders that really had the right portfolio on because, I had a lot of longs on the majority of the time and I think I could have done better. So hopefully next time I will be in better spots with better stocks and, take advantage of the market a bit more versus trying to massage and maneuver and trade and look for tactical patterns to help add cash flow. So I'm just rambling at this point. So hopefully you're still tuned. If you're still tuned, that means, you have endurance for the course and I wish you well. Have a great weekend. Scott Rella, T3 Live. See you Monday morning with Brittany. Looking forward to it.
I'm Evan Lazarus, Chief Knowledge Officer for T3Live.com. You don't become a great trader by watching videos and taking courses. You become a great trader through live screen time. Accelerate that learning curve by tapping into the experience of seasoned professionals. Currently, we're offering 5-day free trials to each of our 4 mentoring rooms. In the mentoring rooms, We teach our strategies in the context of the live market. To sign up for a free trial, go to the T3 Live education page, fill out the form, and get started when the next trading session begins. We hope to see you in one of our mentoring rooms.